we know about Tropical Storm Isaac, it's that oil and water don't mix. Let's talk to David Shepard. He covers oil here at Reuters. David, let's get right to it. All right, we know that refineries are being shut down, rigs are being evacuated. What does this mean for supply and price of oil, these energy companies?
Well, what we've seen so far is that the price reaction in oil and products, including gasoline and diesel, has been relatively muted. We did see a bit of a spike in gasoline yesterday because the major concern is what happens to the refineries. So far, there's been about 1.1 million barrels per day of oil production cut off, but an even greater amount of refining capacity is coming offline. As a result, traders are weighing it up and saying, for crude oil, this might actually be quite bearish because we're going to see crude oil stocks rise. Okay. On the flip side, we might not see much in the way of refinery production out of the main refining hub. This is, of course, home to about 45% of all US refining capacity, and much of it is going offline as a precaution at this stage. However, prices today have come off slightly again, and really there's one concern in all the market's minds for those on the bullish side, and that might be that the government is looking at the chance to release strategic petroleum reserves. Interesting.
Okay. And explain that a little bit, flesh that out for us a little bit more in terms of the chances of us tapping into crude oil reserves.
Well, we've got to look at this in the context of the last 2 months. We've rallied for 2 months, coming up about 30% in both crude oil and gasoline. As a result, there's concerns about what this is doing to the overall economy, not to mention the fact that we've also got an election coming up in November, right, obviously. Yeah. So some people are saying that now if they want to lower crude oil and gasoline prices prior to the election, this storm might provide a degree of political cover for releasing reserves if we get a larger supply disruption. Of course, there's other reasons such as Iran and the sanctions which are there. One famous consultant, Bob McNally, who used to work for the George W. Bush White House as an energy advisor, he said today that he thinks they might use this as a reason to tap reserves in the coming weeks.
Interesting. Okay, we're looking very quickly in terms of it, not much of an equity story as you mentioned in terms of the stocks, things relatively
flat. I mean, most production, people are taking precautions here. I mean, it's key to remember that this is not Katrina.
Right.
This is a far smaller storm, but however, in the wake of BP's Macondo disaster a couple of years ago, everyone is ultra cautious at this stage. However, equity markets have largely priced that in.
All right, let's look actually and play Weatherman a little bit here as we have a map of the storm tracker, and you can see those are the oil platforms that are right in its path.
Well, yes. I mean, the ones in its path have definitely shut down production. Even those on the outlying side of it are also taking precautions and taking people offline. The EIA said yesterday we've got about 1.1 million barrels per day of production shut off. We might even see a slightly higher number. However, that's largely priced into the market right now. Traders know what was coming there. So as a result, again, crude oil price reaction, not that big.
Not that big. All right, David Shepard, thanks so much for being with us. I want to remind folks, actually, as we move to the hot spot here, before we do, to check out the lower third of your screen. We have more headlines of the day. And now onto the hot spot. And who would be there but, of course, Ryan Blistelica, our markets guru.
Who's this other source you have here?
Hey now. Get into a little bit of a guest clash here. No. Everybody's good. Everybody's nice. All right, let's talk some stocks that are moving. PVH. We're going to talk a little retail here, a little fashion, something I know you're into. Calvin Klein, Tommy Hilfiger, they are up 5%. Tommy, an iconic American brand, big in Europe.
Yeah, some good news here and sort of surprising news, just given the way the economy has been going for a while. They not only raised their profit outlook, but this is the third time that they raised it. And guess why? It's because their European division is doing so well. Europe, of all places, with all their debt crisis and all this other stuff, doing very well there. The Tommy Hilfiger brand, like you mentioned, especially strong there. They expect that to remain popular with consumers. So very good news out from there. Stock is up, like you said, and we've been seeing this in the past, other retail names, or apparel retail names, excuse me, doing especially well compared to like electronics and some other divisions of retail like that.
Sure, and I think margins are a key here as cotton prices fall second half of the year. Let's move on to Movado. Yesterday we saw weak earnings from Tiffany. Movado, however, 5-year high. They're up 17% today.
Right. They license clothing brands, including Tommy Hilfiger, in addition.
Good day to be Tommy.
Right. Hugo Boss and so forth also raised their profit outlook. Stock is up quite nicely today. And they also cited strong margin growth and prospects, as well as just strong demand in general. So good news in this space today.
We're going to switch and go to Lexmark. They're dumping their inkjet printers. I had one. It was crappy. Sorry, Lexmark. It was a cheap model. Getting out of that business, and they're cutting 1,700 jobs. That's not so funny.
Right. Stock is up today because they're going to focus more on their more profitable business segments. So they're getting rid of the inkjet printer one, which is actually what they were sort of known for a while. Now they're focusing on imaging properties, that kind of thing. But like you said, they are cutting 1,700 jobs, which is good for the stock today just in terms of what it means in terms of cutting costs, but just bad just given the economic environment and the unemployment rate, obviously.
All right, let's go back to the big board and talk about the big case, the ongoing effects of this Apple-Samsung. Today, Apple looking to ban 8 smartphones of Samsung. Samsung fighting back, though.
Quick recap, the court ruled that Samsung had violated Apple's patent design for its iPhone with various Samsung products, which is why Apple is saying now you can't sell these anymore, we want them banned. They're not going to come into your house and just grab it out of your hand if you already bought it, presumably.
That'd be a little rough, and difficult.
But they are working to kind of like get these off the shelves at least so no one can buy them.
You can still get them on Amazon. I mean, this is not the latest Galaxy S3, although I think they could potentially, that would be big news if they were able to get that one ixnayed out of this country as well. But there's S2 and some models that are very popular.
Right. Samsung is appealing the verdict, but they might comply with this, at least in the short term, just because they are a partner with Apple, they supply chips to them and so forth. They probably don't want to jeopardize that relationship, so we'll see. It's going to be tricky waters for them to
Chilling
navigate.
effect, though, over the industry if you're somebody like Google or anybody else who has a design similar to the iPhone.
Right.
And that if you're not coming out and looking like the iPhone, it really helps, obviously, the dominance
of
Apple.
The iPhone is just such a basic design, it's going to be hard unless you have like a triangle phone to really have something new.
The triangle phone.
Yeah.
I think you may be onto something. Or not. All right, let's talk about the broader markets today.
Okay.
Fairly flat overall.
Yeah, not much to talk about. I mean, we've been hovering around break-even levels pretty much all day, and basically we're just waiting on Friday when Fed Chairman Ben Bernanke is going to speak at Jackson Hole. Hopefully he's going to detail a third round of quantitative easing or some other kind of stimulus program. We're hoping to get an indication of when it might occur, the size of it, all that kind of stuff. Before then, we're really sort of like not really doing much. We don't want to go make big bets or sell anything like that.
Well, one thing the Fed always looks at, obviously, is housing. And we've been saying housing's back, sorta.
Right.
But good numbers today from Case-Shiller, home index, single-family homes price up 5 months in a row. 5 months in a row.
Right,
now.
5 months in a row of gains. Again, the housing sector was so beaten down when the bubble burst that these are really sort of like, inches off the bottom in a way. Nowhere near the historic highs. But we are seeing some signs of life there, which is obviously encouraging.
But the flip side, consumer confidence index, as we're looking here on the scan, it's,
a little bit of a dent this past month. You can see it's still above 60, which is encouraging.
However, the weakest in 9 months there,
Right, we were expecting it to rise off July. We were expecting to go from 59.9 all the way up to 55.9 all the way up to 66. I think I made a mistake.
We've got confidence in you. Don't worry.
Anyway, we weren't expecting much of a rise. We were expecting one. Instead, it sort of fell back, not drastically, but just enough to be a little bit of another reason to be concerned.
All right. Ryan Vlastelica, thanks so much, and thanks to David Shepard as well. Follow us on Twitter. Don't forget, we tweet a lot. Lots of headlines of the day coming on Twitter at Reuters Insider, and great shows on our YouTube channel. That is Reuters.com/ReutersTV. I'm Lisa Bernhard. This is Reuters.